The rally-based rally strategy is a simple way to trade the long side of the market. Do you need a way to buy your favorite markets? The RBR may be it. Now in under 6 minutes, we will teach you how to trade the rally-based rally. When this video is finished, you'll be able to identify and trade the RBR in the live market. Now remember, at the end of the video, click on the link below to get our free rally-based rally PDF. All right, the clock's ticking. The rally-based rally, or RBR, is a three-phase pattern. It consists of an impulsive upward move, followed by a period of consolidation, followed by another impulsive upward move. Now the period of consolidation is the key. It's known as the base. It's a demand zone that will serve as our market entry point and stop loss guide. Here's an example of the rally-based rally on a 30-minute gold chart. Phase 1's the rally, phase 2's the base, phase 3's the rally. For the strategy, it's a buy-side strategy. That means we're going to profit from bullish price action. We're going to do that through buying the base. Now this strategy works best with confirmation. More on that in a minute. All right, let's trade the RBR. Okay, let's take a look at a real rally-based rally strategy trade and run through it and see if I can answer a few of your questions before you ask it, okay? We're going to go slow. We're going to see if we can get through this and really show you how this thing works. All right, the first things we got to think about is what are we trying to do? The rally-based rally is a buy-side strategy. We're trying to benefit from rising prices. How are we going to do that? We're going to buy the base. Now remember, the base is the basis of our trade. That's where we're going to look to buy into the market. And lastly, it works best with confirmation. In this case, we're going to use just basic resistance as confirmation. We've got a nice double top here on this gold 30-minute chart. We're going to use that as confirmation that we're on the right side of the trade. Why would that mean anything? Because once resistance is taken out, it becomes support. You can use whatever you'd like here, though. You can incorporate Fibonacci's, one of my favorites. You could also use RSI, maybe stochastics, or a moving average, maybe a moving average crossover. Lots there to work with. In any case, the first thing we're going to do is identify our pattern. So what do you have here? Phase 1 is the rally. You'll notice that's sort of a decisive move right there. You can see that you've got a nice little upward move in price. We went from right down there around 27.12, somewhere in there, up to about 27.28. So that's pretty good stuff. The second thing is our base, a period of sideways trade. We're not bearish, we're not bullish, we're just sideways. And then lastly, our phase 3 is a definitive move out of the base. Okay, we're looking for, it's almost a breakout, really. It's an upward trajectory that establishes that, yes, we are trending, and yes, there are more bulls than bears in the market. Okay, now let's go ahead and have a look at our execution parameters. You've got some options. Number one, you could buy the top of the base. That would be your entry point number one. That's the most aggressive way to trade this strategy. Entry point number two is about 50% of the base. That's going to be more conservative. That's more patient. But just because you're conservative and patient doesn't mean you can't pile on the leverage there on your entry point two. Why? Because your stop loss does not change. We're going to shade it just a few ticks or a few pips beneath the bottom of the base. Okay, now we're using our Trading View market replay functionality here, and we're doing that to really show you how this works. Let's go ahead and roll forward in time and see exactly what happens on this gold trade. Now, a couple of things right here. You'll notice we've already gone several hours ahead. The big question I would get, Shane, is the third phase over? Is the rally over? And I would say no. You still have a decisive move out of your base. You got a bit of a pullback. We didn't get our buy there, but that's okay. We're going to stick with it and take a good look. You still got a rally. You still have an uptrend. It's not as pretty as it was, but it's still there. All right, let's go ahead and roll forward in time again and see what happens. Let's go ahead, bang. Okay, that's what we're looking for. You got a nice 90 minutes there of bearish price action, and what happened? The market came right to us. We had our base just ready to rock and roll. We had entry point number one. We had entry point number two. Our stop loss was locked down. At this juncture, our profit target is either a static 1 to 1, 1 to 2, 1 to 3, whatever we want to do, or you can shoot for the top of market structure, which is going to be well established before you ever get into the market. So that essentially is your rally-based rally strategy. It's not rocket science. I would say the most challenging part of this is finding a time frame that's going to work for you. I really like the 4-hour on the Forex charts. I love the 30-minute time frame on, say, U.S. equities indices during the U.S. session. Also on gold, gosh, 30 minutes, tough to beat on gold, really from that London beginning to the New York end. Every market's different. Come see a live stream, ask some questions. We're going to trade this rally-based rally strategy live for you via live stream at howtotrade.com. That's it, guys. That's the rally-based rally. The rally-based rally strategy is an easy way to trade on any market on any time frame. Establish confirmation with other indicators, any indicator you want, and you'll be off to the races. Now remember this cardinal rule. To win with the RBR, your potential profit must be at least equal to your risk. Dial in your money management and go to work. All right, that's a wrap. Download the free rally-based rally PDF below, and we'll catch you on the next one.